Good evening, ladies and gentlemen. My name is Roberta Annan. I'm the managing partner of Annan Capital Partners, ACP, headquartered in Accra, Ghana. ACP started after 4 years of working at the United Nations as a resource mobilization officer, where I saw the role that private capital has on creating an avenue to solve some of the most challenging issues that we have here on the continent. I decided to set up a business to be a conduit to bring in much needed capital to address some of these challenges. And impact investing became an alternative investment asset class that I decided to promote to family offices that were within my portfolio. Today, we are here to talk about impact investment, and we are at the Impact Investment Forum, the African edition. And the topic for this forum is unlocking Africa's potential in impact investing. In fact, the forum aims at creating a platform for like-minded local, regional, and international, socially responsible and impact-driven policymakers, investors, family businesses, and entrepreneurs to discuss ways on unlocking the Middle East and Africa's opportunities in impact and ESG investing, and inspire the growth of the Middle East and Africa's budding innovation and entrepreneurship ecosystem in ways that can change the landscape of investment and enable the growth of the knowledge-based economy in the greater region to create homegrown ventures, inspire the next generation of innovators and entrepreneurs, create jobs, retain our talents, and attract international investments. We would love to start this by giving the platform to Sepati Mokoa, the Chief Strategy and Innovation Officer of HD Africa, to give the opening remarks. Thank you.
Good morning, good afternoon, and good evening to you all, depending, of course, on which part of the world you are dialing in from. My name is Sepati Mokoa, and on behalf of the organizing committee, I would like to officially welcome you to the Impact Investment Forum Africa edition. The objective of which is to share insights and discuss the way forward on how to unlock Africa's potential in impact investing and how to enable it to achieve its sustainable development goals by 2030. For investors who want to make an impact, Africa is an obvious place to start. Well, at least one would think. The continent's rapidly growing and urbanizing population, coupled with its resource wealth, is said to be one of the century's economic megatrends. However, despite the growing worldwide interest and attention in impact investing over the last couple of years, the overall sum committed to investing in Africa are a tiny fraction of total assets under management. According to the Brookings Institute, Africa still needs an additional $256 billion in US dollars in financing a year until 2030 to be able to achieve its SDG targets. It is important to mention here that as of today, at least 600 million people in Africa lack access to electricity. 4 out of 10 live without safe drinking water. A fifth of primary-aged children are out of school. And unfortunately, 237 million people are malnourished. Despite the slow progress, we've seen some impact investing efforts in terms of job creation, strengthening urban infrastructure, and supporting agriculture. The bright side is that according to the Global Impact Investor Network 2020 survey, 43% of impact investors have funds allocated to Africa. That is more than any other emerging market region. 52% of these investors plan to increase their Africa exposure in the next 5 years. Why Impact Investment Forum and why now, you may ask? Well, the forum seeks to create a platform for like-minded and like-hearted people who are passionate about creating a thriving ecosystem for impact investing and innovation in the continent. It goes without saying that impact entrepreneurs and entrepreneurs are what our world needs right now to help curb the socio-economic challenges exacerbated by COVID-19. The recent unrest in South Africa is a classic example of what happens when there's inequality, high rates of unemployment, injustice, and when majority find themselves living below the poverty line. This forum seeks to address such challenges, and we will do it through shared insights, new perspectives, trends, and ideas on how we can rebuild confidence in impact investing in Africa and the way forward on how to attract international impact funds and capital to accelerate the next wave of impact innovation and the entrepreneurship ecosystem. It is from this premise that I am delighted to welcome all of our partners, the various stakeholders who contributed to the success of this forum, and most importantly, you, our esteemed guests who are joining us from various locations across the world. Together, let us not only build the Africa we want, but let us do so with real impact and through noble initiatives and investments that will make this continent self-sustainable for generations to come. Once again, a very warm welcome to you. I thank you.
Thank you, Sepati, for such insightful remarks. Now we're moving on along to the next session. It's actually a conversation between Rob Herself, who is the chairman for Invest Africa, and Zara Malik, who is the founder and CEO of Grosvenor Capital. And the topic that they will be discussing is the role of family businesses in accelerating impact investing in Africa. Enjoy.
Thank you so much for a wonderfully warm welcome for this incredible, important session. I cannot say how honored I am to have my former chairman, Rob Herself, join the Expert 101 on the role of family businesses for Africa. Rob, a huge warm welcome to you this morning from South Africa. Thank you sincerely for joining us.
Dara, lovely to see you again. I'm so proud to be on the forum, and I just want to give a lot of credit to you and Ara Feletti, and this is a fantastic forum. Well done.
Thank you so much. So Rob, to crack on, really, I think we've discussed impact investing for many years, especially when you had decided to found Invest Africa. It was about creating these meaningful relationships and bringing a spotlight onto the continent. I'd love to understand what impact investment means to you and how you define it, because I think your insight would be incredible. So thank you so much. Over to you, Rob.
Zara, it depends on where one is investing. And there are 55 countries in Africa. But if you take Africa as a whole, or sub-Saharan Africa, and you talk about impact investing, I believe the most important thing of all is to give people opportunity, hope, and something to look forward to. So giving someone a job, a paid job, is the greatest thing you can give them, because the multiplier effect in Africa is so much greater than anywhere else in the world. I can't mention the big corporation in Africa, Pan Africa Corporation, but they did an analysis of the multiplier effect of giving someone a salaried job. And depending on the country, it's between 20 and 50 other people. So it's not just direct family members, but it's people who then start businesses to supply the business that he or she is creating. So giving someone a job, an employed job, is absolutely the key. That's the real impact that one can achieve in Africa.
And based on that, Rob, what would you say in terms of, measuring impact is sort of one of the big key discussion points that we've seen throughout the forum and across the topic, where we're saying, how do we measure the success? And this is where we can't necessarily determine the ROI, but in this instance, we can say the sort of return of impact rather than investment. How do you see this sort of job creation opportunity allowing us to kind of serve that measurement issue within impact?
So there are many ways to measure it, and the private equity firms, I think, almost have the best measurement, and it's quite a complex cross-section of boxes to tick that you're fulfilling, in terms of gender diversity, and starting with employment, gender diversity, other elements of diversity, how green, how clean. And I think all of that is good, but those are subsets of the most important issue, which is giving someone a job. If you can create economic growth, and that's something that the ANC, our people running our country, don't ever mention, economic growth, but it really is the most important thing of all. And 6 of the 10 fastest growing countries in the world are in Africa. But
absolutely.
We did a private and confidential analysis. We took the main countries in Africa, the key hubs, Nigeria, Kenya, Ghana, South Africa, and we stripped out out of the GDP numbers, the tech development. So you might get a country growing at 3, 4, 5, 6% GDP, but the tech sector is growing between 50 and 200%.
Wow.
So if you ask me where the opportunities are in Africa, it's technology and it's now.
So Rob, actually that allows me to kind of allude into that. So you mentioned that you've done this incredible analysis of the situation on the ground. So do you mind perhaps sharing some of the key projects that you're working on, and where has impact become your focus?
So I've done in fact, in the last 6 months, I've launched a SPAC to the first ever mining SPAC, first ever Africa SPAC, $400 million listed on the New York Stock Exchange. I've launched 2 tech companies. I've bought an airport near Cape Town. I'm building the second airport in Cape Town. And the biggest one of all, which is actually still confidential, but I'm going to tell you because I adore you and my new friend Ara, with 2 of the biggest names in technology in the world, both from Sweden. We're launching a $200 million Africa Technology Growth Fund. And we're going to invest in health tech, education tech, fintech, and an area we call market enablement. We have $60 million already committed by the 3 founders and a group of unicorn founders, people that have built, 18 of them who've built billion-dollar businesses, who will make themselves available to our African portfolio companies to help them be successes. And what we want to do is create role models. In 2005 in Stockholm, no one had ever thought of Stockholm as a technology place to be. And then Nicholas Zenstrom sold Skype for $2 billion. And all of a sudden people started to say, well, he's kind of nerdy and not that smart. I can do it. And more people started to launch businesses. And now Stockholm is one of the biggest tech hubs in the world. Klarna, the most valuable private tech company in Europe, Spotify, and many, many others. So we want to create African unicorns, African role models. So more and more people say, hang on, I can do that too.
I mean, Rob, thank you so much for actually announcing that on this forum. I think that is, much needed. Again, I think several conversations that I've had with you in the past about how do we create opportunities, by Africans for Africa. And I think tech is the most, it is the enabler in order for us to do this. So huge congratulations. And I can't wait to see where this goes. And
well, we've got one other little thing. So we've hired the top GP team you could imagine. A woman in Johannesburg, a woman in Lagos, and a Kenyan in Nairobi. I can't say who they are, but we'll announce that soon. But Nicholas Adelberth, the co-founder of Klarna, the most valuable private tech company in Europe, $46 billion still private, is putting all of his carry, which is about 20% of the carry of the fund, back into Africa through his Nordshen Foundation. So our social impact is going to be huge on day one. So that's also exciting news.
I feel like that's absolute music to my ears. And I think it's so needed, especially given the year that we've all gone through and everyone sort of, I think impact's really been brought to the forefront as a result of sort of, post-pandemic era as we try to grow and develop. And I think, having such funds and obviously having great minds such as yourself, Rob, to spearhead this is really needed in the continent. So huge congratulations. I can't wait to find out further details and to hear about these amazing individuals that are joining your journey. So huge congratulations. On that, Rob, actually, and I think something that we touched on before recording this session was about the importance of funding. So although the kind of narrative around impact is sort of yet to be, we've all got our own definitions, we all understand, purpose-driven investments, but I think funding plays a fundamental role here in order for us to actually get to achieving our impact. Therefore, from your background with your family office, as well as a, very successful individual entrepreneur, how do you see family offices playing a role to accelerate the impact in Africa?
So until now, and I'm generalizing, most of the investments in new businesses or funds have been done by DFIs, the development finance institutions, who've done an amazing job. CDC, DEG, DFC, Swedfund, Norfund, FinFund, FMO, amazing. But in many cases, they are not very commercial, not for profit, or they have very high standards, which may not be that applicable when it comes to the social impact era. So increasingly family offices are saying, look, Africa's starting to turn. Technology is where it's at right now, amongst other sectors, but I'm going to talk tech. And we want to be in. We want to invest. And these family offices can commit significant funding. You know, they're not just the 5s and 10 millions, they are potentially 50s and above $1 million per investment or per fund, per family. So more and more family offices are saying, look, it's very difficult to get returns in Europe and America because valuations are out of control. Getting talent is even harder. You know, the retention rate in Silicon Valley is 6 months. If you keep a top employee in your company for 6 months, you've done well. That's crazy. In Africa, relatively, we have a lot of talent, great entrepreneurs, but a lack of capital. Now, at the venture level, the DFIs and venture funds have been investing for the last 15, 20 years, and the unicorns are starting to appear. But what we think is missing is the next level of funding, the growth capital, the sort of late Series A, B, C, D. And in the past, most companies would get to revenue, start to create traction, look for the next round of funding, and then they'd have to go overseas to Silicon Valley. We want to be the Silicon Valley in Africa funding partner. So that's the exciting part from our side. Now, family offices are going to be fundamental in that. And we, as my background is in that area, you know, I've done a lot of calls on behalf with Hans and Nicholas, my partners, on behalf of our fund. And I've never had such resonance. Hans, who's raised 9 funds at North Zone, and North Zone is the Sequoia of Europe. He's on his 9th fund at North Zone, 12 unicorns. Okay, he's the unicorn hunter, and one of my best friends said that he's never had such a positive feedback from all the family offices we're calling. And many of them have invested already in Africa, but many haven't yet invested and are saying, we buy into the thesis. We see Africa about to happen. This is exciting. We want in. So something's turning, and it's very exciting.
I mean, absolutely. I mean, I can feel the energy through this, Rob. I think it's, as you said, timing is fundamental, and also making sure that you've got leaders of industry to be able to shape the narrative on the continent. I think, you know, it sounds like you've got the key recipe there for huge success. But I think, so what I would love to understand as well is, obviously you've now announced this incredible platform that you're creating and building. You know, why did you see that there was a need to do that now? And why do we feel that impact, you know, is at the forefront? So, you know, you've decided that now it's time, social impact is key for you and your journey. But why now, Rob, if I may ask? And what are some of the lessons on the ground, or some of the sort of nightmares perhaps that you've seen that you think, right, I've really got to take matters into my own hands?
Very good question. So my frustration comes from governance. You know, there are 55 countries in Africa. I sensibly evangelize investments in Africa. There are probably only 15 countries that are investable, and there are only 9 that I would invest in. I mean, that's pretty poor. 55, I would only invest in 9. You're going to ask me which ones, but this is for another conversation.
To say, I'll be sure
and there's only one
that.
sector, I mean, other than my airport that I'm building in near Cape Town, but there's only one sector that really excites me. It's technology. And you asked why? Because there are 1.2 billion people in Africa. 60% are below the age of 25, and the average age is 19. Everyone has some form of mobile device, not a smartphone yet, but the prices are coming down so fast that in the next few years, everyone of the 600 million young people who in 10 years are going to be, you know, 29, 30, 35 years old, everyone will have a smartphone connected to the internet. And you know what that means? It means no longer are they going to put up with spending a whole day paying their bills. They're going to pay it in seconds using Flutterwave, Paystack, and other fintech companies. No longer are people who are in the urban areas or villages going to accept one teacher teaching them every single subject under a tree or in a rudimentary classroom. They're going to connect straight to Harvard Online or great universities and schools overseas. And no longer will people have to go to the local doctor, you know, travel quite a distance. They just get straight through to great Indian doctors or great Swiss doctors, telemedicine. And it's happening now. And that's going to be 600 million people who will be able to do that. It's going to change Africa, and it's going to leapfrog bad governments. You know, you won't need to rely on the ANC anymore to mess things up. We just it's true. We're going to leapfrog that in edutech, fintech, medtech, and other areas like agri-tech. I'm so excited about Africa, and the young people can see it. They don't want, why do you need a license to cut hair? It makes no sense.
Absolutely.
Governments just put regulations in the way, but digital leapfrogs that. It's so exciting. Africa's going to take off, and the young are going to say, well, if this person can be a billionaire, if she can build this business, if he can do that, I can too. I'm going to give it a go. And we want to be the capital to allow them to do that.
I mean, again, I think it's, sorry, go on, Rob, please.
One last thing. Why now?
Yes, that was
all of the family offices that we speak to are moving from my generation to the younger generation. And the younger generation of these big family offices in Africa and around the world are saying, hey, mum and dad, amazing what you've built. We're very lucky to be, the recipients of this, but we want to make a difference in the world. We want to make investments that improve people's lives. We want to make money, for profit, commercial, but do good at the same time. That's what's changing. The big mentality in the world is changing here in the younger generation saying, now, Nicholas Adelbert's a good example, the co-founder of Klarna. He took a lot of money off the table of Klarna. He's made a fortune. Such a smart guy. And he's decided that the rest of his life, he's going to improve other people's lives with his money. So he's founded the Norshen Foundation, and he funds companies that improve other people's lives. I mean, that's where the world is heading, and that's wonderful. Governments beware. You're not in charge, we are.
I think Robbie touched on a really great point there. I think we have highlighted the importance of family offices, but the sort of, how we're transcending now into next gen and how everyone is far more driven by purpose. It's becoming, we can't ignore it. And it's refreshing to know that even for you and your peers, Rob, that you understand this and that you're trying to implement this now, so that you really are trying to almost pass the baton on to the next gen. So again, hugely, hugely reassuring. I think on that as well, if we kind of go back to the family office discussion, and the reason why I mentioned that is obviously, you know this region fairly well, being based here in the UAE, that family offices truly are the backbone of the economy and in terms of growth and opportunity. We've got about 72% of businesses on the ground that are essentially run by family businesses and the legacy that they hold. What I'd love to understand is perhaps for some of our listeners, and although family offices are becoming far more savvier into the impact space, what are a couple of the lessons or things that you've seen as you're kind of, going on to this journey what are some tangible, perhaps guidelines? Why should family offices invest in impact? I'd love to have some of your insights, because I think these key sound bites that you've given us in this interview would go, a long way for us to perhaps guide some of the family offices, even here in the region, over to the continent as well.
So I just firstly have to credit the UAE. The UAE has been flying the flag for Africa in the Middle East, head and shoulders above anywhere else, head and shoulders above Saudi and everywhere else. And funnily enough, in the last week on my fund, Hudson and I have had 4 conversations, one with the Saudi family office, 3 with UAE family office, 1 yesterday, Wujud Al Fatayim. And they are committed to doing not just smart investing in Africa, but impact investing. They want to know that what they're doing is going to make people's lives better from all angles. I'm very impressed with the guy, Joe. I spoke to Joe and Mohammed yesterday. Very impressive young man, smart, and very keen to do the right thing in Africa. I mean, what a great conversation. And then my old buddy Kamal Bahamdan, the same thing. He really wants purpose in his investing in his family office. So I think the UAE and the Middle East can do enormous good. And the UAE, to its credit, has been flying Africa flag for a long time. And in the Dubai chambers, and our friend Laila, amazing job that they do. So well done the UAE, well done the Middle East, and let's see more. And what the Middle East and the UAE in particular forcing other countries to kind of move a little faster in their positive investing in Africa. And certain countries which might have gone into Africa with a more rapacious view, like China, are being cautioned to start doing more of the right thing in Africa. So other countries doing good, not just family offices, are influencing others. It's positive momentum. I love it.
No, absolutely. And Rob, because I'm just conscious of time, I'd love to, there's just a couple more questions as well, if I may. So I think for your journey to date, it's obviously, you've been a part of several sectors, and obviously now tech is something that hugely excites you. I think one point I just wanted to ask, and we've spoken about the next gen, we've touched a little bit about the youth and the fact that we've got almost 600 million users to our disposal coming up within the next decade. What are some of the lessons that you've perhaps also taken from the youth on the ground? What are some of the things, because again, I think I've personally seen you as one of my professional mentors to date. And this sort of, we touched on mentorship and the importance of it. What are some of the messages that we can give the youth today where we understand impact, but how can they actually be able to create this into something tangible? I'd love again to know your insights almost as a mentor to the youth, that this is a message that we can give to them.
So mentoring is fundamental. And, if there is a business opportunity in mentoring, and I'm a business animal, it's how do you scale mentoring? There are extraordinary people in the world, extraordinary, that I've learned from, but I've been lucky enough to be working directly with them. How do I take that knowledge and give it to a lot more other people? Well, you do it through role models. Success stories breed success. You see an African, Elon Musk, as the richest man in the world. Wow. I mean, that excites all Africans, even if Elon's a bit different, special, whatever you think. He's from Africa. Patrick Soon-Shiong, the second richest person in Los Angeles, is also from Africa. That's 1 and 2. We must be doing something right. There are Nigerian businesses that are popping through as unicorns. Flutterwave, Calendly. Do you know Calendly was founded by Nigerians? Another African.
I actually did not know that.
Yeah. So we must trumpet our successes as Africans, just M-Pesa from Kenya. Let's get people around the world to know what we're doing right. And things will flow from that. So mentoring is fundamental. It's how do you scale it? I'm setting up a mentoring system with a young man called Teddy Kuzmayo in South Africa, bringing other mentors in and giving younger people access to these people. So I'm very excited about that. Why has this happened in this part of my life? I think it's just an age thing. You get to a point where you think, I'm actually happy with what I've done. I don't want to have more money particularly. I'm good at business, so I'll keep trying because I enjoy it. But nothing gives me greater joy than to spend a little bit of time with younger people who take my advice and then make successes of it. I mean, it just warms my heart. And I'm thinking of some specific people right now, and I'm just so proud of them, And if they outperform me, I'd be thrilled. I honestly would be thrilled.
No, and I know that comes from a sincere place, because you've always been a huge advocate for anybody that's worked with you. And I can say that personally. So,
and I love the way you say worked with. No one's ever worked for me.
You taught me that. You've taught me that.
Yeah.
No, Rob, that's one of the lessons you taught me, that we worked with you. Yeah, I wouldn't have done it without you. You're one of my huge mentors personally. So
thank you.
It's a huge honor, and I know that comes from a sincere place. So Rob, just the last question, if I may, although I could sit with you and talk with you for hours and get all of your sound bites, but it would be great just as a concluding, just to kind of go back to the session, how we've talked about the role that family offices can play within impact. What are some of the kind of couple minutes of advice that you can give investors that are looking into startups into Africa? And although, you're creating this platform, why should investors now invest in Africa? Why into tech? And so essentially, why should investors, particularly the family office space, look in Africa now? So I'd love for you to perhaps, again, share your knowledge there.
So one is the big macro pivot, that the 600 million young people who in the next 10 years are going to be consumers, even with small amounts of money, micropayments, all through the device that they have in their hands that are getting cheaper. This is the future of Africa. So that's timing. The second is, the pivot has shifted to Africa, and Africa is going to create its unique technology answers to problems. They're not going to look completely like what's happening in Asia, Europe, and America. They're going to be African solutions, because there are different challenges here. And young people, just should get up and give it a go, because failure is no longer a negative thing. It used to be, in America's always said failure is a learning lesson, and they're right. I had a huge failure with Sportal company, didn't make it, but I learned more than I ever learned in success. And Johan Rupert, a great friend of mine, says, never confuse luck with genius. Some people build businesses are lucky, but it doesn't mean they're smart. So the message really for family offices is Africa's time is now, particularly in technology, and technology or technology enabled. It's quite a broad church. The talent is in Africa, no question. There are tons of smart, dynamic people being raised in Africa or returning from incredible training abroad. They want to come home. They want to come back to Ghana, back to Namibia, back to Zambia, wherever, and build businesses. So the time really is now, and family offices are realizing that. The DFIs have done a great job, the institutions have done a great job, but now's the time for the family offices, particularly with the younger generation like you.
Thank you so much, Rob. Again, a huge, huge honor to have you. And thank you as ever for being so incredibly articulate and for giving us your insights on the ground. And, it's a huge pleasure to be reunited. I look forward to hearing all things about your technology platform. And of course, I speak on behalf of Innovate for Good. If there's anything we can do to support you here in the region, we would be honored. And again, thank you sincerely for your time. And I look forward to hopefully doing this physically again, rather than having to allude to us doing this on Zoom. So,
lovely.
Again, huge regards to you, and thank you.
Keep flying the flag, Zara. You've been amazing. Thank you.
I will
darling.
forever. Okay. Thank you so much, Rob. Thank you.
Bye-bye.
Bye.
Thank you very much, Rob and Zara. That was a very, very interesting discussion. And I'd like to go into the next segment of the program. We will be giving the platform to Juma Al-Hameli to give us some expert insights on the matter. Juma is the Chief Strategy and Business Development Officer for the Abu Dhabi Global Market. His topic is going to be focused on fostering a culture of partnership for impact investment in Africa. Enjoy.
Distinguished guests, ladies and gentlemen, it is my distinct pleasure to join you all today as we look to exchange insights on the opportunities that lie within a thriving African continent, an area that bears no shortage of promise in the realm of investment. We at Abu Dhabi Global Market, as well as the wider Emirate of Abu Dhabi and UAE, have placed the African continent at the helm of our investment and trade market priorities. For decades, the UAE has enjoyed great relations with Africa and is the continent's second largest investor, having also forged a sustainable double tax treaty network, including many African nations such as Algeria, Kenya, Senegal, and South Africa. ADGM and Abu Dhabi have continued to drive investments toward this fruitful market as it showcases robust talent, plentiful natural resources, and a burgeoning entrepreneurial scene. Several of the UAE's sovereign wealth funds and public sector institutions have recognized this promise, such as the Abu Dhabi Investment Authority, which has held multiple Africa-centered conferences and knowledge-sharing programs to gain greater insights into the continent's growth trajectory. The area of impact investing, which is rightfully the central topic of today's event, has also been explored extensively across the UAE, hallmarked by several landmark initiatives such as the UAE's first social impact bond, inaugurated by the Authority of Social Contribution, MAN. The UAE is well aware of the immense positive outcomes of impact investing and has since placed great focus on championing this novel financing mode to ensure the nation's continued growth across key areas, including food security, renewable energy, and climate action. Working alongside leading international public and private stakeholders, the UAE has introduced several initiatives and projects, including crowdfunding platforms, educational courses, and capital raising schemes to inject an influx of funds toward achieving the nation's sustainability goals. The urgency to champion sustainable practices as well as finance the wider sustainability drive has never been more important. As we know, the financing gap to achieve the United Nations Sustainable Development Goals by 2030 stands at $2.5 trillion annually. However, the challenging landscape of sustainable financing in emerging markets has given space for innovative financing to develop. An example of this is the South African Impact Bond Innovation Fund, which is the first social impact bond focusing on early childhood in the Global South. ADGM has placed great emphasis on advocating for sustainability practices and has initiated several high-level partnerships and frameworks to satisfy this commitment. These range from first-of-their-kind initiatives such as the UAE Guiding Principles to flagship events and agreements such as the Abu Dhabi Sustainable Finance Forum and the Abu Dhabi Sustainable Finance Declaration, which have all seen participation from leading international public and private sector institutions. We at ADGM are also striving to expand our participation in Africa's startup landscape, as it boasts the highest entrepreneurship rate in the world. The rapid pace of digital expansion and adoption across the continent has also yielded a number of opportunities for incumbents and venture capitalists alike, an area that ADGM is committed to catalyzing. Further testament to this is the resilience of Africa's fintech scene amid constrained economic conditions such as the COVID-19 pandemic, with new fintechs having raised almost $350 million during the first quarter of 2020. To enable this growth, we continually encourage venture capital firms, family offices, funds, banks, corporates, law firms, and advisors to explore ADGM as a place to mobilize investments towards Africa. As we look to contribute to and leverage Africa's wealth of opportunities, happenings such as the Impact Investments Forum stand as key enablers of this exchange, and we take great pride in having participated in this year's landmark event. I am confident that the insights shared today will be of great importance to the continent's continued growth as we all strive to capitalize on the promise of a sustainable tomorrow. Thank you.
Thank you, Juma. That was so insightful and we really enjoyed it. Now we're moving to a panel discussion. I'm very excited about this panel because it's on women. The title is Changing the Status Quo, How Women in Africa Are Leading the Way on Impact Investing. That is a really splendid topic. And on this topic, we have a discussion between Sepati Mokua, who is a chairperson for the Strategic African Women in Leadership organization. We also have Abi Mustafa Mudwako, who is the Chief Executive Officer for the African Private Equity and Venture Capital Association, AFCA. We have Esther Desanu, who is the Manager of Affirmative Finance for Women in Africa under the African Development Bank Group, and Jessica Robinson, who is the Founder and Managing Director for Moxie Future. Enjoy this.
Thank you so much for that wonderful introduction. Impact investing has become a significant player in the world of finance, with $502 billion in assets under management globally. Women have played and they continue to play critical roles in shaping every facet of the sector. In comparison to traditional finance, women are better represented in ESG investing. Today, I have the pleasure of being joined by three incredible women who are going to help me dissect the role of African women in impact investing as investors, entrepreneurs, and leaders. First on the panel, I have Miriam Esther Desano, who is the coordinator of affirmative finance action for women in Africa with the African Development Bank. And then I also have Abby, who is the Chief Executive Officer of the African Private Equity and Venture Capital Association, and Jessica Robinson, who's the founder and MD of Moxie Future, also author of Financial Feminism, A Woman's Guide to Investing for a Sustainable Future. Ladies, thank you so much for joining me today and welcome. To kickstart, let's get into some stats. Perhaps Esther, from your point of view, you can share with us some of the impact entrepreneurs in terms of women in the continent. What are the statistics and how are we pairing in comparison to the rest of the world?
Thank you so much, Patty. So I think in Africa, women entrepreneurs fare better in some instances than in the other regions in the world, in the sense that we start businesses at a much faster pace than in other regions. However, as much as we start businesses faster, we also face significant challenges when it comes to accessing finance in order to grow those businesses, but even more so to get them to the level whereby they can employ or create jobs on the continent.
Great, it's interesting and I guess helpful that we have Abby here who can help us maybe with the statistics in terms of investments towards impact investing for women. Abby, what's your take on that? And also supporting what Esther is saying, that it's easy for us to establish these businesses, but in terms of investing or getting funding for them, it often is very difficult. So if you could maybe take us through your understanding of the space and the statistics that you have.
Oh, thank you, Patty. So I guess if the question is, are women as represented as men in the impact investment space, I think we all know naturally the answer is no, but the representation has been increasing over the past few years, which is definitely a positive thing. We're seeing more investors, more female investors become more prominent in not only the impact investing, but also in the traditional general investment space as well, which is really encouraging. If I can just refer to the IFC report that was done in 2019 called Moving Towards Gender Balance in PE and VC, and the report revealed that 12% of senior investment professionals across private equity and venture capital were women. And this was a really great signal to the industry because it was really positive, because historically you haven't had that much female representation in these senior roles in P and VC. So I guess that's the first thing I wanted to signpost, to just show how positive the evolution has been over the past few years. Then if we look a little bit at the fund managers, the dynamics of the fund managers, to your point about how there's a dearth of financing for female entrepreneurs, part of that is because if you don't have adequate gender representation on the investment side, the likelihood is that finance won't cascade to some of these female businesses. So it's really important for us to push for that gender diversity on the investment side. And we're seeing that evolution occurring over the past 5 years. There's been more focus on gender lens investing. More generalist fund managers have been incorporating gender into their investment approach, which again is really positive. If we look at our data, we are tracking about 40 gender lens investment fund managers that invest in Africa, which again, I don't have the data from 10 years ago, but I'm fairly certain that those wouldn't have been the numbers. So we've seen a lot of increase there. And these are fund managers that are raising funds that are targeted at investing in female-led businesses or investing in teams that are gender balanced. So that's on the PE side, on the later stage investment side, that we have that, which is positive. If we then look at, and if to give you an example, these are funds like Lithia Identity. We've also got Arua Capital that's focused on investing in female-led businesses. And then if we look closer towards the early stage investment space, naturally VC has gained a lot of traction over the past 2 years. And in the same vein, we have some fund managers that are raising VC funds that are targeted at women as well, which is amazing. An example of that is Django, the Senegalese fund manager. But what's interesting is our data, when we interrogate where this capital is going, into what sort of businesses. So the early stage investment, our data shows that 20% of VC investments in Africa in 2020 were in early stage companies with a female founder or multiple founders that included at least one female. And then further, our data also shows that 11% of VC investments in the same period were in early stage companies with a female CEO. So we're seeing from the entrepreneurship side, we're seeing more investments going into female founders, and also from the traditional organization, we're seeing more investments going into businesses that have women as part of their leadership. So definitely positive. I'll stop there. But we can talk a little bit later about kind of the LP representation from the institutional investor side as well.
Great, thank you for that. That's actually quite encouraging because, you know, when you are in it from an entrepreneur's point of view and you're struggling to get funding, you don't always see the overall picture that you have access to. So thank you for sharing that with us. Jessica, let me come to you. I want us to talk about a little bit about women and wealth. What are the main trends that are happening and how is this affecting the investment world?
Sure. So I think it's really important to really focus on these strong emerging trends and therefore what we can do with this, you know, in terms of building the impact investment industry, particularly in Africa. I mean, the heartening news is that women now control, you know, a significant chunk of the world's private wealth. You know, we're looking around 32%, and this is growing annually. It's expected to double every decade. So, you know, and this is a worldwide phenomenon. The other interesting thing to note is that this is increasingly self-generated. So women are very much economic powerhouses. We create, we control, and we influence a huge amount of this wealth. At the same time, we're seeing that more women are coming into the workplace, you know, particularly in the financial industry. And I'm very heartened by Abby's stats that she's just shared with us, because actually it's demonstrating, well, the numbers are still small, they are improving. And I think that gives us a huge sort of impetus for encouraging more and more women in all regions to be in the financial industry, as this is so critical to developing the types of products, the type of analysis that many women as investors are looking for. You know, that redirection of corporate strategies, defining services, you know, that are increasingly tailored to women. And again, I think, you know, the news is good on that front. The third trend that's really relevant to what we're talking about today on impact investing is that there's increasing evidence that women, when they're making investment decisions, genuinely care about the bigger picture. So there's a lot of research out there, and we have actually done some global research which interviewed women from a number of countries all across the world, and we found that 83% of women surveyed genuinely care about where their money is invested, and 69% feel a sense of urgency to invest responsibly. So with all this change underway, it's all sort of leading in the same direction. And in terms of the dynamics and how that's impacting on the investment industry, you know, I think many of the financial institutions are really waking up to the opportunity that women as investors represent, and they're becoming increasingly active. We see that in terms of the growth of investor networks of women investing in women. You know, we've touched on a bit of the gender lens investing, which we'll explore later. But I think it's worth recognizing the movement that's actually happening all across the world. We still have a long way to go, but I think there are some significant trends happening there.
Great. Is this the reason why you decided to write your book, Financial Feminism?
Yes, absolutely. I mean, my day job's in sustainable finance, but I've always been overwhelmed, and I've lived and worked all over the world, by the number of women who approach me in a professional capacity and say, well, what can I do with my money in a personal capacity? So the problem we have is that many women feel disengaged from the financial industry. So we need to do a better job at really connecting with what women as investors want. And this is where impact and sustainable investing is so critical.
Okay, wow. You've alluded to this being a global phenomenon. I want to maybe go back to Esther and Abby. What are the regional trends that we can observe, and what about Africa in particular?
So thanks again. I'm actually very heartened by the data that both Jessica and Abby referred to, because interestingly enough, in Africa, though, I think overall impact investing is making its way through, but I want to say it's making it in a perhaps timid manner for a number of different reasons. Very often we hear both from impact investors as well as even traditional, financial players that as much as they see the opportunity for the women's market, the types of women entrepreneurs that they would want to invest in have a tendency not to be found. Or if they are in very small numbers, which at times, makes them wonder whether, it's worth taking the risk. And we've heard it both from, funds that are managed by women and who are saying that, instead of just focusing on entities that are led by women only, they have expanded their reach, just because focusing on the market alone may not be as lucrative as they had expected it, or would take a long time. And so what that causes to think about, or pushes to do, is to start, if you will, grooming more women, and to first of all ensure that we're focusing on the right market segment, sizing that market segment so that the types of investment decisions that need to be made are made. But we're also coming to the point where we really need to now feed our market so that these impact investors can reach, or can have a bigger pool of demand to pick from. And interestingly enough, very recently, we were looking at data from COVID, which zoomed in even more on that, in the fact that the majority of these enterprises that we're talking about are enterprises that are not formal. They are very, very small and remain in the informal sector. And so if we're now pushing impact investors to look at the women's market, we also need to ensure that we're looking at this issue and putting the right training, the right tools, etc., to ensure that we have a much bigger pool of women entrepreneurs that are strong, that impact investors will want to look at.
I couldn't agree more. Abby, maybe coming to you, what do you think the financial industry can do to help these women be fundable and investable?
Yeah, it's a good question. So I think the interventions have to cut across the three layers. So I think, the intentionality starts at the LP, so at the institutional investor level. And then there's also work to be done at the fund manager level. And obviously there's work to be done at the portfolio company and founder level. So if I start with the latter, so I have a different view. I think there are loads of, these women with opportunity, with business ideas, with potential, perhaps as Esther mentioned, with ideas that aren't necessarily scalable at this point. And yes, as we all know, 80% of the women-led businesses on the continent, they're informal businesses. So there's that aspect of informality. My view is that in itself presents a gap in the market for organizations to come and incubate some of these ideas, or to accelerate some of these businesses, provide them, to Esther's point, with some of the technical assistance, provide them with the know-how so that they might be able to strengthen their business operations, formalize their ideas so that they can then attract, whether it's pre-seed or seed stage funding, and then we build the deal funnel that way. So at the very early stage, there's some work to be done around just strengthening the portfolio companies. Additionally, I think there's work to be done in fully established companies where women are employees. So not looking at the founder perspective, but looking where women are employees, that there should be some work and support given to help them ascend the corporate ladder so that they also end up in decision-making positions, because we need to tackle it two-pronged. It's not just from the entrepreneur perspective, there's also those that are in formal employment. How do they ascend to leadership positions so that they can start also, you know, your sister's keeper, they can also start, you know, whether it's signing contracts with supply chain organizations that are female-led and kind of cascade the impact that way. From the fund manager perspective, I think it's all about intentionality. It's thinking about gender lens, thinking about women, economic empowerment throughout your investment strategy. So when you bring any deal, any opportunity that you're considering, look at it through a gender lens. What impact will that have? You know, this business we're investing in, you know, the companies as part of a supply chain, are they women-led? What knock-on effect will it have on women empowerment? And thinking about it that way. And I think a lot more fund managers are thinking about that, particularly African fund managers, because they've been incorporating ESG practices into their investment approach for ages, because they're primarily funded by the DFI. So it's been a requirement. So the S part of the ESG, a lot more fund managers are thinking through their investment decisions and through a gender lens, which is great and very positive. And I think also at the fund manager level, more work and intention has to be done to ensuring that there is senior representation, so that there are women in kind of senior positions, senior investment officers, that there are women as part of investment committees, because the likelihood is, if you have women that are part of the origination teams, their networks will be a lot wider than, you know, men. So if you want to be able to source these diamonds in the rough, or these gems, these female companies, you need to do it with a wider network. So you need to have some of these women in key positions, key investment positions at the GP level. And finally, at the institutional investor level, I think the work that 2X Challenge has been doing has been fantastic, which is, you know, the G7 DFIs coming together to mobilize 3 billion to invest in women-led businesses towards women economic empowerment. It's been great because they've exceeded that challenge. They've now set an even bigger challenge of 15 billion by 2022, I think it is. So I think initiatives like this that are basically showing from an institutional investor perspective, they're going to back fund managers, they're going to do direct investments that have positive economic empowerment for women. I think this is also positive.
Great. We've touched at length what institutions in this ecosystem can do to help women. What advice from the three of you, I'll give you each a 10, can you give a woman or women who want to engage more in the impact investing space?
So I think from our end, and the program that the African Development Bank has put in place through AFAWA actually encompasses everything that Abby has just mentioned. And so in order for it to work, it is really critical that not only do financial institutions need to put everything in place and ensure that women from the leadership all the way down the line are well represented and put in a situation where they can make decisions or influence, for sure, the decisions. But I think it's also important that women entrepreneurs as well, if you will further develop the relationship that they have with the financial industry. And here it's whether we're talking about commercial banks, whether we're talking about impact investing funds, there is still a bit of reticence from women themselves in, I think, trusting. There's a perception of the industry that women have, and that in a way also is an impediment to their ability to access the funding that is available to them. Because to Abby's point, it really has to be a two-pronged approach. And so for me, the advice for women entrepreneurs will be understand the financial industry, pinpoint who is the best financial partner for you, and then move forward.
I mean, I I can follow on from Esther's point in terms of when we talk about how to engage women as impact investors. And, one of the questions I quite often get asked is why did you not write a book for men? Why were you focused on women? And I think, sustainable and impact investing is clearly not just for women, right? It's not a man versus a woman issue. What we're trying to do is address this relationship that women have with the financial industry, whether it's one of perception, I'm not an investor, or whether it's one of, as we talk about female entrepreneurs, there's sometimes we know that female entrepreneurs are not pitching when they think they're going to get a no. So how can we build their confidence? And that's where there's that intersection between female investors and female entrepreneurs. And the point that Abby was making, I think, around investing with a gender lens, the 2X challenge, which has been phenomenal. What we are seeing some of the investors do, so there are the gender investment products, but it's actually putting that overlay of gender into sustainable and impact investing products as well. We have the data, we have the evidence, so it's really all there for us to do. I think, in terms of the advice, this relationship again with the financial industry, they need to do a better job. We need to focus on financial literacy, doing things to support women. I think, leveraging the sort of the tech developments, fintech platforms that are coming out. I mean, I'm always concerned because fintech is so male dominated that we're designing solutions with a male default lens. And I think we need to start calling that out a bit to ensure that these types of platforms actually address what women are needing, both as investors, but also in seeking capital as well. And the other thing, of course, is having these conversations. The more and more that women come together in a peer-to-peer discussion, the more their confidence grows and the more they feel able to connect with other female investors and actually go out and find these female founders as well. And I think that's certainly something I've seen firsthand in the last couple of years. And I think it has a huge amount of potential in emerging markets and, in Africa and other markets as well.
And Abby?
So my advice or my suggestion would be for the fund managers that engage in impact investing, and also for the entrepreneurs. So on the fund manager side, it would be not to regard impact as separate to return. The two can coexist, and you can, as they say, you can do well while doing good. And I think having that mentality on the upfront, I think at the onset, I think is important. So not only just striving for return, but also striving for impact as well, and vice versa. I think also investors need to take a collective responsibility to build out the ecosystem. So along the lines of exactly what Esther had said that the AFAWA program is doing, because I think, that pipeline is really important, because if you spend enough time building the ecosystem, then, the pipeline is robust enough that you can just move them along the kind of deal pipelines. So I think spending time supporting that ecosystem, and I think doing so also by sharing success stories. So even as we're discussing now, I think there's a power in sharing success stories. There's so many great female entrepreneurs that are doing fantastic things that we just don't hear that much about. For instance, to Jessica's point about fintech being completely flooded by male entrepreneurs, that's so true. The other day I read about Okra. They're a fintech provider in Nigeria led by a female founder who's also the CTO. You rarely hear of women being CTOs for these fintech companies. So I think, evangelizing, storytelling, and just kind of doing that, I think is really important. On the entrepreneur side, I completely agree with everything Jessica and Esther have said. I think they need to be clear about matching the finance they require with the stage of business that they're in. I think when they're going to pitch, they need to be very clear about the impact, what the impact is. Because if you're going to an impact investor and you're pitching to an impact investor, they need to understand the impact matrices. They need to understand what that is. So I think having that very clear and solid and at the forefront when you do your pitch is really important. And I think, Yeah, I think just be clear on your pitch, be clear on your need, and get your ducks in a row as much as possible. So before you approach, particularly an equity investor, get your ducks in a row, have your back office sorted out, have your corporate governance in place if you require that for the stage of financing you're going after, and be as ready as possible so that when you get the opportunity and you engage with impact investors, you put your best foot forward.
Incredible insights from you ladies. Thank you so much. I think from my side, maybe two things that I just want to add on to that. It's interesting that we do come up with these solutions in terms of support, but I have to agree with you that women don't often take them up. I work very closely with ARA. You'll see that every time there's a call for startups or entrepreneurs, a majority men. So I don't know how one can solve that, but maybe just the women themselves, we really need to come out of our shells and make use of the available funds. We can't put ecosystems, funding and support together, and then the recipients that we've tailor-made them for are not there. So thank you so much for such a great session. I hope that whoever's going to be watching this will get the right insights that they're looking for.
Wow. Talk about powerful women. Wow. How women are such a powerful force. And it's great to see some examples of how they're leading impact investing in Africa. And thank you so much, Sapati, Abby, Esther, Esther and Jessica for that discussion. It was quite insightful. Now we move to another panel. The title of this panel is Unlocking Africa's Impact Investing Potential. And it will be discussed between NJ Ayuk, who is the chairman for the African Energy Chamber, Baksha Dasgupta, who is associate director for the Abu Dhabi Global Market, Ara Fenezian, who is the founder and CEO of Stratasys. And again, the topic is Unlocking Africa's Impact Investing Potential. This is very exciting. Enjoy.
Thank you for the introduction. Good afternoon. My name is Ara Fenezian, founder and CEO of Stratasys and Innovate for Good. I welcome you all to our exciting panel discussion on unlocking impact investment opportunities in Africa. Our panelists today have vast financial asset management, strategic consultancy, and investment experiences in emerging markets and industries across healthcare, agriculture, food, financial inclusion, crypto assets, fintech, reinsurance, sustainable finance sectors, and so on. So please allow me to introduce to you NJ Ayuk, Executive Chairman of the African Energy Chamber, CEO of Pan-African Corporate Law Conglomerate Centurion Law Group, and the author of several books about the oil and gas industry in Africa, including Amazon and Wall Street Journal best-selling Billions at Play, The Future of African Energy and Doing This. We have as well Dr. Bhaskar Dasgupta is the Associate Director of Business Development at Abu Dhabi Global Market, focusing on financial services across emerging markets and Europe. Dr. Dasgupta is responsible for overseeing the development of the banking, asset management, private banking sectors, including key areas such as crypto assets, fintech, reinsurance, sustainable finance, and digital. So our session today will discuss the tremendous growing attention of mainstream global investors in impact investing, with its current global market size estimated at $715 billion with 20% growth each year. The last 18 months, COVID-19 crisis has accelerated further impact investing, driven by healthcare sector, sustainability, agriculture, and education sectors. Despite these growing trends, the COVID-19 crisis will weigh heavily on Africa. Estimates show that recovery in Africa will cost some $154 billion. That's on top of the pre-existing annual SDG financial gap in Africa with $200 billion. So we will discuss and share insights on what is driving this global trends in impact investing, why Africa is lagging behind, how this can be managed to reduce the funding gap, and how Africa's capital markets can attract impact funds to accelerate local solutions to its current challenges and advance its impact-driven entrepreneurship and innovation ecosystem. To start with, I would like to ask you, NJ, what are the impact investment trends, constraints, and opportunities in Africa?
I think, first of all, thank you so much for having me. It's always an honor to actually have these kind of conversations, because with the work that you do and really bringing, some common sense to the market and the global industry, and especially with Africa, it is something that should to be commended. When it comes into impact investment opportunities and constraints around Africa, you can, just look at COVID. You could start seeing where are the COVID millionaires, where are the COVID solutions and everything. Africa is still the continent that has the most available, I would say, issues that need solutions. What do I mean by that? Growth in Europe and the United States have stagnated, it's grown. But in Africa, in the sector where I walk in, you're seeing a big amount of people, 800 million without access to any kind of energy. Talk about impact investment. Anybody who can figure out how to get those power into those communities will make a lot of money. Will find it will be great investment. And so you continue to see a lot of problems looking for solutions in the continent. And I think this in itself calls for us to be to start thinking a little bit outside the box and be more purpose driven. From the north of Africa, you see so much commodities trading, but coming down south, agricultural basis, looking at gas, looking at other things with infrastructure, that you're going to see a lot of trends that are going to move around. But within the continent itself, the Africa Continental Free Trade Act, it is what I would call the biggest impact trend right now, because you have now the largest free trade market in the world, 1.3 billion free trade market. It just was signed this year, and that creates a big, massive opportunity for Africa.
That's really an amazing figures, and from the opportunity side. Pascal, what do you think? I mean, how do you look at it from UAE, assumingly, the opportunities in Africa today on the points that NJ was talking now?
Thank you, Era, and great points, NJ. I'm, of course, speaking from the perspective of Abu Dhabi global market, and what I see in my jurisdiction, and also the conversations that we see insofar as Africa is concerned from the Abu Dhabi perspective. I have to say that, yes, COVID did have an impact. This was a pretty unique situation with respect to both the demand and supply shocks that the world has impacted. But then, if you look at the underlying economies, Africa has got what I would call as all the positive factors, and the free trade agreement that that NJ referred to is just one example. If you look upon the entire globe, and if you are looking at where the growth is going to come from, where is the population growth, where are the people who are going to be buying refrigerators or cars, wanting to educate their children, all that growth, a substantial portion is going to be in Africa. So from the perspectives of opportunities, I completely agree with the fact that there is a huge amount of opportunity in Africa. Now, if we want to take a look at the investment trends, I mean, let's put it in this way. Just over the past couple of days, the first thing was that Abu Dhabi's Sovereign Wealth Fund, Mubadala, has just announced an agreement with BPI France to set up a fund which is going to invest in Africa. Today itself, I had a call from a private equity fund which is interested to set up an Africa-focused fund for SMEs. And this was just over the past 2 days. So I don't have to actually talk about the broader overall piece, but then that has happened. I mean, in 2019, ADIA hosted an Invest in Africa conference where we had exceedingly clear indications and appetite to invest in Africa. Now, the one thing that obviously is there is, if you're talking about constraints, I think I'll point out to 2 or 3 big ones, especially when you're talking about large-scale investments. You don't usually have those large-scale projects that are available to hoover up, let's say, $500 million or above investments. And for the smaller ones, obviously, you do have some challenges around, for example, data availability, connections, flights, things like that. But I don't see them as unsurmountable. Those are just something that you just need to navigate. So overall, quite positive and bullish about what we are seeing in terms of investment in Africa.
Bhaskar, you just said earlier that there will be a lot of requirements to do with from this education and the social requirements. But from why to consider social and environmental factors in investment decisions? And does this make business sense, let's say, for local and international impact investors? And how Africa can benefit from this trend itself?
I think it is absolutely vital, because if I look at this from a simple commercial perspective, and if you think about it, you have got the fact that the investment thesis of investing firms is now starting to get more and more aligned with the SDG and ESG goals. Plus, as I said, there is a dearth of the large projects. So when you start looking at it from the perspective of social and environmental areas to invest, first of all, they have a huge amount of investment opportunities. But on the other hand, to try and answer your question about why consider social and environmental factors in investment decisions, look, reputational risk is very, very high. And these days, investment decision making is getting highly evolved. People are not just looking at investment decisions purely on the basis of just blunt economic return. They also have to consider the social, the environmental, the governance impacts. And it has been proven on study after study after study that firms who undertake investment decisions whilst considering and actually investing in social governance and environmental factors are actually going to end up with a better rate of return, more consistent rate of return, less disputes, more take up. So it totally makes business sense, not just for impact investors, but any investors. In fact, I would say that I'm starting to see that impact investment is becoming mainstream.
And Jay, how do you look at this? I mean, Bhaskar was looking at it more from international, let's say, a dimension on a local ground. I mean, how do you see the environmental and social factors will impact the decisions in South Africa, and whether you're seeing this trend is moving forward, or you're seeing more, you're relying on grants to support this trend?
I think Bhaskar is right. I put it this way, you got to think global and act local. And if you have to get that going, then we can be successful. But also, we need to be good stewards of the environment. We have to come in from a human perspective. We're just here to take care of this environment and what we've been given. And people should be our ultimate push when it comes to this. But let's face it, Africa can no longer live and rely on grants and handouts and foreign aid. It is not the future for Africa. Africa has to deal with investment that looks at building people up, whether it is through education, whether it is through the right kind of community development, whether it is looking at, when you look at energy, you say, how do you get the right kind of projects that brings people along? Look at some communities where you have mining or energy projects, they abandon agriculture. We have to look at all the totality of the circumstances and drive that. But we can no longer, this idea that this continent should be the basket case for aid. So you go into some places, you see aid workers with nice fancy Prados and fancy cars, but the communities are still in poverty. Then when social justice and how we look at it is going to be the defining issue of this decade. We're dealing with a world where they're talking, who would have thought about the biggest push right now on climate change and energy transition and looking at how the whole ESG issues happening around the world. This is welcome. We shouldn't deride it. We should welcome it because everybody deserves that. And that doesn't just go into, as Pascal said, doesn't just have to go in, it doesn't just have to go only into looking at investment decisions strictly on financial basis, but now for once, we in business and the corporate community, and not just in the international community, but in Africa, we've been asked, how are you impacting the community? How are you doing things that go beyond your profit margin? It's not just all about profit, but how are you lifting people up? And because when we do that, we cut out on some of the crises, some of the civil issues and the civil rights issues that get abused, human rights. We frown upon it. I think everybody around the world was disgusted by what happened in the United States with George Floyd. When you saw this man had a knee on his neck, because we have awoken, and this is good. It is a good thing, and business welcomes it. And we should take that opportunity to drive a community and a world and an Africa that is as good as the people that live in it.
That's a great observation and reflection, NJ. So today we spoke that there is a funding gap. And the only way I think to move forward, we need to see more public and private finance that need to be galvanized, or the partnership among them, to accelerate the move to meet the SDG gap and the COVID recovery in Africa. Because I believe, as you said, aids are not going to be a help if there will be no private sector engaged heavily in that, whether locally or internationally. I think it will be the gap even further bigger and bigger over time. So how do you see the appetite there, NJ? And the same question will go Bhaskar, because I know you have some experience here as well in UAE as well and abroad about seeing how the private and public sector partnering to tackle solutions. So let's look at it first from NJ's point of view on what he's seeing.
That's the only way for it to work in Africa. We have governments which are big bureaucracies, which sometimes mean good, but they don't have the capabilities. They don't have the technical know-how, and even the financial. Even sometimes they can collect your taxes, but they will not know how to use it. So you need the private sector to come in, and this is why when you talk in the last segment, we talked about social empowerment. This is why you need to empower the private sector, and at the certain space in smaller communities, you have private sector actors acting together with government to drive that. And you're going to see more of that, and we've seen a lot more of that happening in Africa. For 8 to 9 months, our skies were closed. So you had to have African private sector, small businesses, really taking on bigger roles and driving that. Public-private partnerships are going to be the way to go. Whether in small-scale projects, whether in bigger projects, that's just it. I come from business. We have a little bit less trust of government running everything. We believe that a private sector should run things more, but also we need to also be a little bit humble to know that there are some things and there are some roadblocks that governments can help you open. And especially when dealing with our infrastructure deficit. Our big infrastructure deficit creates that. But when you start having this public-private sector partnership, it closes the gap for Africa. And I tell you why. There are so many jobs that do not have qualified people to do in Africa. We have to bring experts from all around the world to do it. But also there are so many people without jobs. So when you look at that, when you have a public-private sector partnership going not just into big infrastructure projects, big energy projects, big pharmaceutical projects. But we have to also look at that in something as basic, but most important as education. Because if we train our people to working together with governments and even through the private sector, then we really start getting into building that Africa that we deserve.
Thank you so much, NJ. Bhaskar, how do you see it as well from your side and your experience in this, the partnership between the public and private sector?
So I'm going to talk more from the perspective of private capital. I think the way public capital has been deployed has been talked about and discussed, and the DFIs are all over the place. So I don't think I can add any further value to that point. But for the private finance or private capital, there are a few things that I need to talk about, because you need to be a bit smarter about this. And frankly, from my perspective, what we need to start looking at is to start not messing around with a few $100 million here and there. We are talking about substantial amounts of money that have to be mobilized. So you have to be quite ambitious about it. And for that, you need to be smarter about how do you get the private capital into this. So the first sector that needs to be mobilized is the private wealth or family offices. They are frequently quite sector specific, but they are also willing and happy to write big checks, can take big risks, and actually put boots on the ground. So from my perspective, what I see is the wealth and the private office and the family wealth that is present in Abu Dhabi and the structures that they're using. For example, down the east coast of Africa, in tourism, in agriculture, in those infrastructure, there's quite a lot of appetite. So you need to be focused on trying to get to them. But the way to approach them is, for example, different from how you want to mobilize private capital, let's say from institutional funds. The issue with institutional funds is they are very heavily biased towards, for example, public equities. And the public markets are, let's just say, not that much available. So forget about that. You have to start going into the private equity sector. You have to go into the venture capital sector. The PE VC fund is a very, very good area for you to explore. And in my experience, that's where the biggest source is to mobilize private capital. The issue for that comes up is that you are talking about private capital investors who want to put in a structure that they're safe, comfortable, and able to deploy from whichever jurisdiction that you think. And that's why we are seeing the presence of quite a lot of these large institutional PE funds who are open and willing and able to invest in Africa. The last piece that I'm going to say is that I think it has been proven over the last 50, 60 years that the traditional way, and NJ, I completely agree with you that trade, not aid, should be our perspective. But we literally have to invest hugely into innovation, into fintech, into impact tech, into SDG tech, because investment in these startups, this is how we are going to start finding out different ways of deploying capital and impacting SDG by innovative ways. So the three things that I talked about, one is target the family offices, second is go after the PE funds, third is VC funds and innovation to actually start investing in African originated or destination investments in new business models, new SDG models, new impact investment models, so that they can actually create a path for bigger pools of capital to follow down those channels. So that's how I believe that private capital can be galvanized to accelerate the move. And we have to be ambitious, frankly. We are still not ambitious enough.
Thank you so much, Bhaskar. And I think the point that you have made on the innovation and entrepreneurship, I think this leads to our final question here today is how this can be accelerated. I mean, NJ, you're in the market there as well. So how you think you can accelerate the social innovation and entrepreneurship ecosystem in Africa to attract these impact funds and grow local solutions for local problems? You know, like in the past, you know, we have seen what Kenya is doing, what Nigeria is doing in fintech as well. We've seen how the trends are going from the local startups that they are doing really, some of them are doing some exits as well. So how do you see this trend moving? I mean, of course, we cannot look at Africa as a continent, as one country, which of course each country has its own advantages, some disadvantages. So how do you see this ecosystem will accelerate, and how much time do you see this all is going to work if we follow, let's say, Kenya and Nigeria as an example?
We need to do it now. There needs to be some political will first, and we need to create an enabling environment. Kenya, which you just mentioned, started M-Pesa more than a decade ago. And that fintech became the leading fintech in countries like Germany, and it went around the world. That is the money transfer, the mobile money transfer, and that is moving all around the continent. But we need to start now. Governments have a role to play. They need to create transparent regulations. You need leadership that pushes, that has a political will to drive it. Not just talk, not just platitudes, but actually pass legislation, but put some skin in the game. Put a little bit of money in it. It doesn't matter what kind of money you're getting, whether it is a little tax that you would use, then it would attract people. It's hard for me to go to Pascal and tell him, listen, I will need you to invest $1 billion into this project. And the first question he asked me would be, so how much do you have for yourself? I said zero. Then it's like, if you can't even believe in what you're doing to put $1, why should I put $1 billion? And that's what we need to start thinking in Africa. We need to look inwards. You know, I always say we have been so used to just when someone criticizes us on issues around mismanagement or corruption, we start shouting. No, we need to start keeping transparent organizations. So what do we do? We cut out on some of the corruption. We ensure there's transparency. Some of the things we hide in, we're not even supposed to hide. It's just like, show your tax returns, show your financial statements. What's wrong with it? What are you ashamed of? Put that out there. Let them know. They'll find a way. It doesn't matter. So that needs to come in. And when you create an enabling environment, you create an ecosystem that sparks innovation everywhere around the continent. It is infectious. Right now, we should be thinking, are we going to get the next big innovation coming out of Africa? Are we going to get the next Mark Zuckerberg or Bill Gates? They should be coming out of this continent because of what the environment that we created and have created for them. That is what we do. And I'll leave you with this, you know, we need to take that self-critic within ourselves as Africans and say, we can no longer accept to just look at things and say, we are just mirrored images of our continent. No, we're not mirrored images. You know, I do use a mirror every morning, you know, but mirrors are to correct what you see, not reflect what you see. We need to start correcting what we see so that Pascal and his money people can start looking at it and say, we're willing to take that risk because capital goes where it is welcome. The sanctity of contracts is important. We're willing to take that risk. The capital goes where they know there's been some groundwork already laid, and I am going to do that. So we have work to do in Africa. It's not late. We get in there. But someone like me, I believe in the word fast track. We need to fast track it. We need to move it because we have a continent with a lot of young people under 25. 70% of the continent is under 25. We need to really drive things so that these young people can have opportunities in Africa and work in Africa and grow in Africa instead of trying to cross the Mediterranean desert, the Sahara desert or the Mediterranean to go out to Europe to search out for better shores on the streets of Europe. We need to change it. And our time is now. There is no angel that's going to come out there to do it for us. We need to do for ourselves what we expect others to do for us. So when they come, they would see a people that are growing and they would respect you and they would work with you and they would treat you with the dignity and the integrity that you deserve.
That's an amazing statement, if I may say, and an opinion. And I truly believe at the end, we need to take responsibilities towards our countries, towards our economies, towards our young people. And there is no other alternative. I think every country has an opportunity to grow. I mean, we have seen many countries around the world, they don't have even resources as rich as Africa, and they have done amazing development, and they are among the top maybe 20 or 50 largest economies in the world. Bhaskar, how do you look into this from your perspective as well on the same subject?
So I think the thing that NJ said is absolutely right. What you have to realize is that Africa has to compete for capital. So I'm not going to talk about sort of, the local presence, because that is, you folks know much better than that. And NJ has very cogently argued what needs to be done. I can talk about how to attract, let's say, the capital that you can see in and around my jurisdiction. First is, local presence is very important. There's 50, 60,000 people who come to, for example, Abu Dhabi, and I'm talking about funds and people with substantial investment opportunities, and they come and meet the various sources of private capital over here. People are coming here and they know they can raise money here. So that's the first thing that I would say, is that especially for African funds or family offices or people who are looking for project financing, they need to be in a place where there is money. Because you're competing against a global demand. That's the first thing. The second thing I would say to accelerate it is to let people know and make it exciting, make it a bit more interesting. You talked about the resources. That's all very fine and good, but talk about the growth. Talk about the better quality of life that people are aspiring. Talk to people about the fintechs that are happening. You talked about fintech, for example. Fintech is one of the sectors where the supply of private capital into that sector is at a multiple times that of demand. That's why the valuations are out of the world. And guess what? I can very confidently say that Africa is missing out simply because it's not been able to articulate or mobilize its fintech startups or fintech firms, mid-size or even bigger ones. You talked about M-Pesa. For every one M-Pesa, there are 100 or 200 who are just not getting funding. So those need to be exposed to a global audience. They need to get into the eyes and ears of VCs and PE funds and other people who are absolutely happy to invest. They just don't know about it. So the two things that I'm going to say is good, consistent local presence. And the second is raise awareness and use the technology. Zoom. Start doing webinars. Let people know this is what exists. Pull in people. That's the reason why we are here, to make sure that people know that there is appetite for Africa, for startups, for projects, for SDG goals, for impact investment. But we need to know about them and we need to talk to people. We can't go traipsing around Africa all over the place, not at this moment. So use technology to reach out. All right.
This is, I think, thank you so much, Bhaskar. I think the way you're looking at it in a very practical way and I agree with you. I mean, I've been looking as well into many hubs around the world and ecosystems. And at the end of the day, transparency and awareness about existing opportunities, this is the first thing to start. Like any business, you need to advertise what you have. Otherwise, how would I know? So I think there is a path along the way. I've seen an amazing, so after our conference on the second day, we have an impact pitch day. So we are working with budding African startups in fintech, in agri-tech, in edutech, and many other, and we are connecting them as well with investors. Because we believe that, and the way our work is, we believe that local problems should be dealt with local businesses. We can't rely on foreign. Foreign funds will always come if, as Pascal said, if you have the willingness, because everybody wants to create value for their stakeholders, right? To shareholders. Wherever there is a good opportunity, we'll go there. And I think I love the way you structured it, and I love your passion, NJ, on the way you see things forward. To conclude our session, I just need 1 minute. What would you say to the people listening to us, whether they're startup or investors? NJ, and then Bhaskar, if you can give us later on as well, 1 minute, just an inspiration for everyone who's listening to us.
If you're a startup investor, if you're somebody looking out to really make an impact, the time is now. Africa could be seen as a place where people see challenges. I see solutions. I see opportunities. But all of us, we do have a role to play. A role where we can take a continent that everybody wrote off. But that continent is producing people, everyday people, from Cairo to Cape Town, from Nairobi to Dakar. They are setting out there. They are going to build a future that is going to be as beautiful as the people that live in it. The question you have to ask yourself is, whose side are you on? Are you on the side of those that say this continent would never make it? Or are you on the side of those that say that we can pick up and we can rise back up and really drive? Are you on the side of those young people that could give us independence without any kind of phones, anything, and they could still shape our continent? If you are ready to go out there and make it be a success, the time is now. Africa is yours. Africa is home of a diverse group of people, but now we need that diverse opinions, that diverse capital, that diverse strength to carry us and build a future that is decent for all of us, because we can change what history has always taught about us, and we can be like what Mother Teresa says, a pencil in the hand of God, writing our own history. Let's go do it. Let's make it work.
Pascal, please,
Let me just chip in.
Message,
yeah,
please.
just my final thoughts. Look, let's put, I think what NJ said was absolutely right, but let me end up with an actual actionable plan. I already said that, there is quite a lot of appetite for it, and I talked about the startups pieces that they're doing. We are currently mobilizing one of the largest gatherings of investors and fintechs, which obviously includes impact and sustainable finance, et cetera, to come to Abu Dhabi end of November. And that's where, as I said, one of the largest groups of investors, and I think we've already mobilized about 150 of them, and they're growing rapidly, to come and meet. Let's do it. I'm very happy to help. If you wanted to reach out to me, very, very happy to explore and signpost you to the right places to go and check out what we can do to help.
Thank you so much for everyone joined us today for our session. I would like to thank so much NJ and Bhaskar for your amazing and inspirational thoughts and ideas to bring in more impact funds and accelerate the social innovation entrepreneurship ecosystem in Africa. Thank you so much.
Thank you.
Thank you, NJ, Bakshir, and Ara. That was really, really great. And I really enjoy that panel discussion, and I learned a lot from it, and I hope you did too. The next conversation is between Noella Kuzares Musunka, who is the founder and CEO of Malaika, a nonprofit organization based out of Africa, and Zara Malik. Again, we're excited to have Zara back on. She, again, is the founder and CEO of Grosvenor Capital. The topic that they will be discussing is what impact investing means in education. Enjoy.
So, thank you very much for the warm introduction. I am beyond honored and delighted to have not only a dear friend, but somebody who I find to be a huge inspiration. I have my dear friend Noella on the line this afternoon. So thank you so much, Noella, for joining us. I believe you're in London.
Yes, I'm in London. I'm in England. It's the sun coming out after a very horrible summer. Finally, the sun is here.
Well, it's so wonderful to have you being a part of this important event in the region, which is really highlighting impact investing and why Africa should be at the forefront of this discussion. So again, I think we won't go too much into an introduction, because I think we just want this to be a very informal conversation, to perhaps get a little bit of more of an idea of some of the work that you're doing on the ground, and where you see impact playing a role. And I know a lot of people that are actually listening into this session now are aware of your work, but perhaps, Noella, if you wouldn't mind just starting off with a little bit of an introduction, and to tell us the journey of Malaika and where you are. Thank you so much.
Yes, thank you first of all for having me, and I'm so happy to see you virtually, Zara, and I'm waiting for you in London. And I can give you a big hug and your little beautiful child that you just got. So to tell you a little bit about Malaika. Malaika was founded in 2007 and now comprise a primary and secondary school that provide free holistic education to 370 girls. And in September, we're opening one more classroom, so we will have 400 girls. They arrive at 5 years old and they grow until 18 years old with us. We're offering them all the programs for free, and we give them the breakfast, the lunches, the school uniform, whatever they need to grow as amazing leaders. We also have a community center that we partially built with FIFA that offer education and sport program to over 5,000 youth and adults. We have built and refurbished 20 wells so that 30,000 local have access to clean water and have a sustainable agricultural program that helps feed the student and staff with, like I was saying, with 2 nutrition meals each day. Malaika is really a community-driven ecosystem that can be duplicated in any context around the world. This year, we will be launching a blueprint, a toolkit, how organization, government, individual can duplicate the Malaika ecosystem. We're sharing our success stories, but we're sharing too our challenges and how it's important that the community is involved in every steps of everything that we're doing.
Mm. I mean, it's hugely inspirational, and I think you've just touched on a point that I'd love to know a little bit more about. So, this sort of idea of, although Malaika could traditionally be seen as a philanthropic venture, but this idea of packaging it almost to sort of say to other organizations or to individuals who'd like to invest in this journey, what have been some of the lessons that you've learned on the ground whilst building Malaika?
Malaika was tough to build because, we are working in a remote area called Kalibuka. There's no water access. The roads were terrible. There was no road infrastructure, and there's no electricity. So all the facilities that we have to build is with the green energy, with the solar panel. And we push the government, really lobbying the government to make the road. So 70% of the road was made. But when you start 14 years ago and now, Kalibuka was a bush, and we completely transformed and pioneered the creation of the completely ecosystem for the community development.
So if we then go on to the next question, Noella, so thank you for giving us a little bit of context of how, you built Malaika in such a remote area. Now, as you know, the main theme of this particular...
And I just wanted to build a school, a leadership school for girls. And I discovered so many challenges, discovered so many issues, problems, that the basic needs that the population didn't have. Before we start to build the school, we needed to build a well in order to make the toilet facility, in order to make the bricks. And hundreds of people are coming every day to get the water, to fetch water. And I was like, my God, when we're going to close the school facilities, where this community will go get water? And it's the reason we built over the 14 years, we built 20 wells that impacting more than 30,000 people a year. And then you cannot educate kids without educating the parents or the sibling. Is the reason the community center was born, and where we're teaching the youth, the parents, the brothers, the sister about just basic thing, to learn to read, to learn to count, to learn to write, to have digital skills, to have entrepreneurship skills, to use water, to wash your hand. We distributed over 11,000 mosquito nets because there's so many kids under 5 years old dying of malaria. And the problems go on and on and on. But we try to really to stay focused and strengthening what we built. Because if not, you can completely work every day and helping the world, and then you collapse. And it's the reason a lot of foundations sometimes are not sustainable and don't last long, because the problem is you need to really focus and stick on your mission and stick on your vision. And that's the reason we create the 4 pillars: the school, the community center, water, sanitation, and agriculture.
Thank you so much. And I think for me, what's been interesting about seeing your journey and having known about your journey for many years now is, so I personally work with some of my, investors or people that are keen to get into the impact space. Why, beyond the kind of traditional philanthropy, are there certain ways that you think investors could invest in education, and why should they be investing in education?
Education, we're seeing it, we're seeing the impact of education. Doing education, the last 1 year and a half has completely been disturbed. We have more children out of school in disadvantaged countries than anytime before. Now we need to have strong policy and working with government, with NGOs, how we're gonna have children, and especially girls, going back to school. Because a lot of girls now, they're being married, they're being forced to be married, they got pregnant. They're saying more than more than 15 million of girls won't be able to go back to school. And secondly, they got married, they got pregnant, or the family get used to have someone helping them at home. So now we have a huge advocacy to have back children going back to safe environment to learn. And how there's a gap now between kids, because we did a homeschool, or some of them didn't have access to a computer or didn't have access to education. So we need to close the gap, that what they lost in this 1 year and a half, and how we can reassure that kids will go back all at the same level. And the digital gap is huge, and the inequality of digital. So we really have to work. Before, it was 50 million of girls in Sub-Saharan didn't have access to education in Sub-Saharan, and now it's even more, millions.
No, that's great to know. And I think for me, one of the key takeaways, and something that I want to explore further, and perhaps this is a discussion for us to have, and maybe in another session once we've done this, Noella, is to really see how we can transform your funding model to have a little bit more of an impact-based opportunity, so that when a donor comes to you, it's not just looking at the philanthropic impact, but looking at potentially, there are so many models out there now. I know that microfinancing, microlending has been turned upside down. And I think more and more people are starting to look at ways that they can innovate their giving, but also make a return on investment. So I think this is something that I would love to explore with you.
It's very important.
Exactly. So it's not just the whole, how do you measure a smile and make somebody feel great for actually donating. But as you said very rightly so, you've now got to think about the funding of Malaika for the next 5 years. And hopefully, if we can use models that impact investing presents to us, that we can perhaps create a bit more of a sustainable model for you, so that you're not having to worry, and God forbid we're not in another pandemic anytime soon, but if there was ever something that will allow you to think about, well, how can I create a model that when I do go out, I don't have to worry about the funding coming. I don't have to worry about a shortage. So I'd love to have a separate conversation with you on that, actually, and see how we can work together on that.
So and this year we're launching technical classes. 95% of the youth in the village don't have skills. So how to put them in a job market is like you're really saying, how to invest, assist, innovate. So, and we're seeing in the pandemic, the people that are busiest is that the plumber, the painter, the builders. So the technical classes we build in the Congo with Malaika at the community center, it's going to be mechanic and electricity. So the youth going to come to train and learn for 1 year. And then we can help them to find a job, an apprenticeship, and be on the job market and employability. And that's something that I always wanted to do for the youth and the village.
That sounds amazing, and huge congratulations for that and being able to put that together. I know that must have been a lot of work.
Next week, the competition.
Oh, that's amazing. Congratulations. That sounds great. I can't wait to hear how that develops and progresses over time. Why is education important in impact? And what are some of the tangible examples that you can perhaps give us, Noella, that you've seen on the ground through Malaika?
Girls arrive at 5 years old and they grow until 18. They arrive at the school, they don't know, they're living, I always compare a girl living in our Western world and a girl in where we are in Kalibuka. A girl in the Congo don't have a TV, don't have the iPhone, don't have social media. So we growing girls that will have their own personality without any influence, apart the influence, of course, of listening to radio or the influence of the community. And it's so great to see them growing because they're grabbing this chance of education. We're seeing Lorian, that is now 15 years old. She's been 11 years at Malaika School. She wants to become a software engineer. Marceline wants to be a journalist. Kabuta wants to become a physician. So they all have dreams. And it's the ripple effect that we're giving at Malaika. Not only the girls coming at the school, but their parents, the brother, the father, the mother, they're coming at the community center. We have Maman Kaluba. She came at a community center. She didn't know how to read and write. She read, she write, she learned how to use a computer. And now she found a job in town where she's a cashier. Wow. So our work has a real impact in their life, and it's through education, educating girls to be leaders of tomorrow, but community to have and to learn skills that they can use and find a job. And we're seeing too with Mama Ya Mapendo, the programs we created with mothers, where we teach them about learning, writing skills, numerous, and then entrepreneurship. And when they learn to do sewing, now a lot of them have their own business. And with Malaika, we created a lot of accessorized bags, masks, and all of that. The mask we're donating to the community to help them. But all the accessories we're doing, iPad cover, laptop cover, we're selling them and the money coming back at Malaika. And when the pandemic hit with our 3D printers, a student of 4th secondary, they used to do the mask shield. And we did 2,000 mask shield and distributed over 60 hospitals. So it was a big honor. People could not believe in Kalibuka, in Malaika School, we were able to do this mask shield. And when you talk with the student, they're telling us, we're so proud because we were able to contribute to this crisis in saving and empowering lives. So that at a young age, even themselves, they have this ripple effect and they have the effect on through their knowledge and the skills, how they could help their society and the country.
That's hugely inspiring, and I think for me, this is probably one of the last questions, although this was meant to be the last question.
No problem.
I think what's been really interesting and that you've touched on is that from such a small, remote part of Congo, you've been able to make such an impact. And I think, obviously Congo is has been the core part of Malika and its journey. And I know that we talk about Africa and we talk about the whole continent, but as you've seen as well, I mean, you've had people from every corner of the world come and visit Malika. Why do you feel that the impact community, beyond the philanthropists, should come to Africa, and why should they be investing in Africa now?
Yeah, I think Africa has an enormous potential. Congo is one of the richest countries in the world, first of all, because what you have in your green cars, the lithium, the cobalt, 70% of the reserves come from Congo. What you have in your laptop, in your phone, more than 60% of the reserves come from Congo with the coltan, etc. So it's a very strategic country, but we need to make sure that our population benefiting it. Where we have infrastructure, where we have health basic, water, quality education, where we will build technological center, where we will polish our own resources and minerals before it's going to be sold in the world. And that's all the steps that us, as the new generation, we want to see. Africa has a huge potential, and the huge potential comes first from individual people. When more nations prosper, I believe we all benefit. People don't benefit of the basic need, and that's a huge problem. Myself, I lost my dad when I was 5. My mom didn't have any resources to keep me. She gave me away. I grew up from families to families. I went to see back my mom after 13 years. So it's a key crucial time for me at 18 years old, going back to see my mother, seeing the way she's living in such under poor condition. And I just didn't want just to help her. I wanted to do something back for my community, for my country. And the diaspora has a huge role on the impact of Africa and the individual. But the young generation is 60% of Africa.
Yeah, very true.
So now the young generation has a big saying in what they want and what they don't want. And this is the biggest untapped resources in Africa that we have is the youth. Our youth are amazing, and they're going to be unstoppable, and they are resilient, they're innovative. They show through the pandemic that they could find solution, and they were there standing on their feet.
I think that's an amazing part to actually probably, before I ask you a very, very concluding question, but I think you touched on, again, a really great point there about the future is the youth. And the next gen in Africa and the talent that is emerging is going to be hugely exciting to watch. And, I can't wait to see some of your...
They're in music, they're in the fashion, they're in the tech world. We see so many African musicians honing the stage right now, and the culture and the fashion. We see Kennedy Zete with collaborating with Karl Lagerfeld. We're seeing all these amazing singers, Davido, Wizkid, Tiwa Savage. It's amazing, Fally Ipupa, all of them. And I think they have a big part to play in the society. And before, we were very traditional. You have to be lawyer, you have to be doctor. Our parents were pushing us for formal jobs. But now we're seeing with sport, culture, with music, with the tech industry, with the social media, with the journalists, the storytelling. There's a new wave of youth in Africa that's so vibrant.
So true. So beautifully put. And Noella, if I may, this is the last question, although I could speak to you for hours and to understand and hear all the stories of your beautiful girls in Malika. What would be, and as you said, you're about to hit 15 years, which is amazing. What would be
amazing.
Yeah, I mean, it's an incredible milestone, and I can't wait to celebrate that with you. But what would be one of the kind of key takeaways that you'd like our attendees to take from today, whether that's the importance of education, whether it's impact investing? What are some of the kind of maybe your key concluding point that you would like our attendees to take away with today?
Keep pushing, really believe in what you do, keep investing in education, because it's the core of a society, of education. Values are very important, and we need to push our government to keep investing in basic needs. and to work towards the sustainable goals. The water sanitation, the education, the equality, and all of these goals that the sustainable goals working, we need to work together. And the unity of all of us is very, very key, because we've been through very, very tough times. But when you talk with the mother in Africa, they say, we still have to go. We had war, we have political turmoil, we have malaria, we have Ebola, and we still keep going. We still have to keep going, because there's a generation that's coming and we need to be strong for them.
What a beautiful way to conclude this hugely enriching session. And honestly, Noella, it's forever a pleasure. And I can't wait to see the growth and the continued growth of Malaika. And again, thank you sincerely for your time. It is honestly a huge, huge pleasure. And I wish you a wonderful rest of the afternoon. And thank you once again.
Thank you, Zara, for having me, and anytime another conversation. And I hope you learn a lot. And we are one. We are one community, and that's what counts right now.
It's very, very true. Thank you so very much. And I think I'm sending it over back to the MC. Lots of love.
Thank you, Zara and Noella. Really great stories, really. And you know what I really enjoy about this is the storytelling and the actual impact that people are making on lives. Quite transformational, and I'm very excited, to be part of this conference. The next panel discussion that we're going to be listening to is on spotlighting opportunities in Africa. And the focus will be AgTech, EduTech, FinTech, and Green Tech sectors. And this panel will be discussed by Q Sibia, who is a director for Startup Africa, Farouk Callahan, who is the vice president for EasyPay, and Jesse Forrester, who is the founder and CEO of Masi Mobility. Enjoy.
Hello, everyone. Thank you for joining us. My name is Q Sibia. I am the managing director of Startup Africa, a digital online magazine covering startups and small businesses across the African continent. I'm super excited to be joined by my lovely panelists, Jesse and Farouk, who are going to introduce themselves in a while. So without any further ado, I'm going to ask Jesse just to give us a short intro for a minute, and then after that, we'll move straight into Farouk. Go ahead, Jesse.
Thanks, Q. It's a pleasure to be here. Hello, everyone. My name is Jesse Forrester. I am the CEO and founder at Masi. We are a mobility as a service company situated in Nairobi, and we're introducing electric motorcycles to try and move or transition Africa towards clean and sustainable energy. We are looking at an ecosystem approach, so we're not just a motorcycle company. So we're looking at two-wheelers, which we call boda bodas here in Kenya, three-wheelers, tuk-tuks, buses, and the whole sort of like road transportation ecosystem. We've so far had a lot of progress with getting a few customers initially and driving forward towards securing Africa's future in a sustainable manner. I also have a bit of a background in agri-tech and have done some food, water, energy nexus initiatives in what I call a past life. So it's a pleasure to be here, and yeah, really honored to be with such great minds.
Thank you so much, Jesse. I'm looking forward to having a chat with you. Over to you, Farouk.
Thank you very much, Q. I'm senior. My name is Farouk Kailan. I'm shareholder and senior vice president at EasyPay. It's a money remittance platform that allows Africans all over the world to send money to their family and relative business partners in Africa. We've been around for about 6 years now, and it's going strong. We've expanded to 10 African countries. We're likely to do Zambia this month, and then also Uganda in next month. So it's a platform that has really brought a lot of relief to Africans. Our plan is to eventually grow into a neobank, and we are passionate about that. We're talking to the central bank. We're working closely with them, Fintech has generated a lot of excitement in Ghana and in Africa by extension, and we're excited that we are playing a major role in that. The Africa Continental Free Trade Agreement is here, and payment is a very essential component of being able to implement that agreement. And we're excited that we provide a solution that ensures that people are able to transfer money from wherever they are to other places on the continent. So basically that's what EasyPay is about.
Excellent. And maybe to start with you, Farouk, where was the gap? What inspired you to actually do what you are currently doing?
Well, I come from a background where I was consulting, and when you are consulting, particularly I started consulting for some high net worth individuals, and I see numbers. I see the numbers. This is quite exciting, but I wanted to be part of a disruption, something that would disrupt, something that would be revolutionary in nature, and something that would ensure that people have the freedom to move money wherever they are, just bring that convenience. So I had a friend called Amit. He's an Indian. He's a technology person. So we started having conversation about, starting something that would, fill that gap. So he's been a tech genius for a long time. So I wasn't really even, very conversant with the fintech space, but he started the fintech. He was going, the numbers were coming. It was quite slow, but we kept monitoring till it got to a point where I felt like if I don't jump in now, I'll miss out on the next bounce of the ball. So the passion was to fulfill a need, to be part of something very disruptive, to be part of a solution, and then EasyPay provided that. So that's where the inspiration comes from.
That's lovely. And Jesse, Farouk talks about collaborating with people as a start. Who did you start working with when you started off, and also what inspired you to jump into this sector?
Right. So for me, it's been super foundational. I love giving a story that when I was a kid, there's this minister of transport called John Michuki in Kenya. And back in the day, everyone used to stand in matatus. It was a 14-seater, but you'd have 26 people. Believe it or not, that's pretty much the story. And he came in and completely transformed the industry to a point where people were actually wearing seatbelts on public transport. So as I was growing up, that was really remarkable for me. And when I went to the African Leadership Academy in South Africa, and I came back to Kenya in 2018, I really felt like I wanted to do something, and transport was always nagging at kind of like behind the scenes, and it became almost like an immediate concern. And I said, hey, why not put a solar panel on top of a matatu? And obviously that has a matatu being the 14-seater. Obviously Mazi has gone a long while since then. Now we're doing motorbikes. Still plan on doing matatus in the future. But starting off, I was able to connect with my co-founder, who then became my founding investor. And now we've just joined a venture builder, and we'll be raising capital very, very soon. So I've had a lot of people support me from my family to, just like friends. Initially, they call you crazy, right? And then they start cheering you on. And so that's kind of been my founding story, really a story of building on top of people. It's actually one of the reasons why I have this hat. So it does come in that way, Q.
Excellent. And Farouk, just give me a short overview. I mean, as an entrepreneur, as a founder, you are also observing what's currently happening within the industries that you are potentially involved in and or not involved in. But I just want to understand, what's your current view on entrepreneurship and innovation ecosystem across Africa?
Well, I take my journey, I take my journey as an example, a young graduate who immediately plunged himself into entrepreneurship. Yes, I have bits and pieces of, understanding of what entrepreneurship is, but it got to a point where I was overwhelmed by the struggle that, we go through as entrepreneurs, particularly Africa. Our territory is quite a frustrating one, and I see how I've never really wanted to have 100% of anything. I'm somebody who believes in collaboration. So we share the risks, we share whatever it is, but I realize people want to have 100% of 10 other than 10% of a million. So the mindset it became difficult. So I felt like I needed to build something to a point where I'm able to bring people in, and once they see value in where I've gotten to, so my journey is that of a conviction and self-belief, and proving that yes, indeed, it can be done. So moving forward, then the challenges, the realities is presented to you: lack of funding, lack of regulation. At times you go into a sector and it's relatively new. Government doesn't even know how to regulate it. They're now trying to understand the sector. And so it becomes very frustration. Either you are becoming overambitious, you are moving ahead of government, so entrepreneurs are always ahead of the system, and it becomes very, very frustrating. So you get to a point where regulators have to invite you to sit at the table with them, to work with them, to create the policy. And once you try to even recommend that this is what is possible, they try to, slow you down, saying, hey, we don't think we're there yet. It's a bit overambitious. It's going to create a problem. This minister has a company in that space. It will disrupt. He will lose his business, So you are not, it's like the system is actually holding you back. You are a solution-oriented person, but the systematic problem is that you cannot move ahead of the system, and it becomes very frustrating. But in all these things, we also came to appreciate that this is what is going to liberate Africa in terms of the financial freedom that we want to see. Entrepreneurship empowers people. I became empowered. Instead of becoming an employee, I became an employer. Today, I have some of my schoolmates who are working for me, where I said, no, you don't have to work for me. I think you can come in as a junior partner or a senior partner. Just you can create the environment where they feel, yes, they are still with their, their person, So I have come to appreciate that entrepreneurship is what is going to drive the economic transformation Africa wants to see. And it's for country managers to understand that, look, this is where the focus and the concentration has to be. This is where the funding has to be directed to, because once people's circumstances are changed, particularly women, it changes the entire dynamics of families, and by extension, societies are transformed. So entrepreneurship is a very important conversation. It has to be at the forefront. It has to be at the presidential table every morning. It has to be discussed thoroughly so that we create that enabling environment for startups to thrive. I don't look at the challenges that I went through. I don't want the next generation of entrepreneurs to go through that. It's not fair. It wouldn't be fair to them. So yes, people say entrepreneurship is a challenge. So the challenges have to be left. No, we have to create an environment where, it becomes easy to start a company. Once you have an idea, a vision to start, funding is there. We're not saying all the funding should be there, but some incentives that to make the territory very, conducive for young entrepreneurs to be able to thrive. So entrepreneurship is important, is key, is what will drive the change that we want to see on the African continent. It's a big conversation and it's important.
I totally agree. And maybe Jesse does as well. And maybe Jesse, to ask you this similar question in a different way, what sort of regulatory hindrances and red tapes have you come across? Think our government can assist entrepreneurs to ensure that the red tape is removed and entrepreneurs are given room to thrive?
Yeah, that's a great question, Q. And as Farouk was talking, I could hear a lot of the same sort of struggles we're going through, despite me being an entrepreneur at a much younger stage. Yeah, in terms of regulation, electric vehicles are new in the world. Well, they were there back in the 1900s, but are really now taking off again now. And we've got a situation where we're bringing in our bikes and you're trying to register them, and there's no category for electric vehicle in Kenya. Or there are no incentives for electric vehicle transitions, despite the fact that it makes a lot of sense, right? So we're seeing a lot of issues in that particular regard, where we're now having a wider industry conversation around standardization. What does that look like in terms of, what are we going to go in, which direction are we going to go for voltages and stuff like that? So there's still a lot for government to catch up on. And indeed, entrepreneurs tend to lead the way, right? So I think if probably government had a entrepreneurship ministry, so to speak, that'll be really interesting. One that's able to understand trends, summarize them in ways, talk to different people, or that could be housed within different ministerial, parts of government, and they can understand different sectors. That would help a lot in terms of moving things forward, because we see no incentives just yet, despite the promise of us saving 50% of the cost to consumers operationally. So yeah, definitely lots of ways to go around regulation and government support.
I see. And when we talk about entrepreneurship and being a founder, I think quite a number of people essentially looking at what other countries are doing, and we sometimes don't realize that we quite, as a continent, we quite have a number of people who are innovative, people who are coming up with great ideas. Do you, and this is for you, Farouk, do you think that there is, I guess we've created platforms, we've created hubs as a continent for these people to thrive? And if not, what do you think can be done in order for these hubs and I guess spots to be created for people to share their ideas?
For me, generally my call is for the intentionality of development. I keep saying that the day Africa decides to develop, we will see. I think we seem to entertain the idea of development is great, it's important, but some of us haven't decided to develop. And the day we make that decision, it will resonate, it will reflect in the way we do things. Look, creating environment, creating opportunities for a younger generation cannot be, we cannot half step when it comes to that conversation. In recent times, I've made that observation. It's a pleasant observation. We're seeing that, yes, and these are driven not really by government. You realize that it's coming from the private space. Government is still sitting unconcerned, but the private sector, the private space is showing leadership in creating that, opportunities for startups. Ghana's startup, hub, idea is growing. The pace can be encouraging, but at least it started. We have quite a few of them. And the global tech giants have also sent a good signal to us that yes, indeed, it's important to start these apps. Google has done that. Twitter is also looking at Africa. Facebook is already here. Twitter is already here. And these are signals. These are signals that tells you that indeed Africa is a very important market. We are very central when it comes to the growth strategy of these tech giants. And they've given us the heads up. They've shown us that, look, this is how you're able to create that ecosystem where startups are able to thrive through creating hubs. Ghana, there's an impact hub. There's a few others that are doing well. I'm also in the process of starting my own hub where I bring, young entrepreneurs to be able to prepare them, to be investment ready, or even raise, funds for them. So it's very important. It's a model that is working, has worked in other jurisdictions, and it's one that will be able to work in Africa. Relatively new. Everything in most things in Africa are relatively new. People are trying to understand, but once we're able to project the pleasant results to people, then it becomes widespread. Africans are not good, mostly are not good initiators, but once something is done, you realize that people started emulating and then they want to run with it. So it's a space that is new. It's shown potential to grow. It's shown that it's one that will create the solutions that we want to see in the startup, environment. And I encourage that quite a lot. And
Farouk, I think we lost you for a while there, but I guess, Jesse, I have a similar question for you around hubs. Are you happy with the number of hubs that Kenya has, I guess, and what do you think can be done if you are not happy with that level of development?
Yeah, so I think there are a bunch of hubs that are coming up. Kenya was recently, would I say, the darling for venture capital investment. Now Nigeria has really taken off with the fintech revolution that's going on there. And West Africa is really an interesting model when you're looking at financial services on the continent. But I think it was the heyday of hubs back in 2012, all the way out till 2014, if I'm not wrong. But we've really seen a decline in true value that they bring and entrepreneurs really coming to the scene. I know personally, I'm not in any hub here on this East Coast, that I like to call it, of Africa. So I think maybe a different model might be needed, right? Like not directly a copy paste from probably like an accelerator and incubator. African startups face very unique challenges to the continent just because of, as we mentioned, the regulatory environment. So you might have, instead of just providing you mentorship for marketing, etc., a government's relations individual. If your startup is heavily centered on that direction, and someone who says, if there's value, if I invest, I can connect you to relevant government offices, and we can facilitate this process for you, right? If it's terms of like customer acquisition, if it's super manual, I think that's something that needs to really show itself. I also think that there was a really interesting model when you look at the United States and the real beginning of Silicon Valley with Draper, the Draper family, and so them actually partnering with universities, because what you realize is tech is really developed in these labs, and then the problem is commercializing that technology. And so we've always been playing catch up on the continent. I really think that if we're going to take off, right, as Farouk is saying, there's still so much that's new. So we were kind of asked to develop much, much faster than we are, to learn and leapfrog so that we can lead. And so I think there needs to be direct involvement in universities. So there is some of that right now, Q, but to be very honest, I think it could be a lot more. And then connecting successful entrepreneurs. We are finally having the first crops of homegrown African entrepreneurs exiting startups, right? And so we have kind of like a foreign founder problem in Kenya, if I could put it that way, where you've got like a lot of foreign founders running startups, and there's a huge debate in the community. And I think it's pretty fine for foreigners to start businesses on the continent, but I also really believe that the place where an African should succeed should be Africa. And when you have to compete against foreign founders who access capital in their countries, that's much easier. And you're here and you don't have that capital, that's particularly a challenge. So I think this new crop of African founders is really, really going to make a difference. And they're really investing in the next generation of African founders. So as we see more Africans exit businesses and start their own funds, I think the change will begin to happen. So it may not particularly be hub driven, but might be, again, entrepreneurship driven from entrepreneurs.
Excellent. I mean, we talk a lot about the challenges and the red tape and the struggles we are facing as entrepreneurs, but I just want to give you some time, Jesse, just to tell us about the successes that your company has enjoyed. If I'm pronouncing it correctly, Mazi, and just tell us what you guys have been working on, top achievements, and your projections for at least the next 12 months.
Thanks, Q. So I run a hardware business in Africa. Even if you're in the United States, if you have a hardware business, investors kind of are like, I want the next app. It's kind of the sentiments I usually hear. And so we had a pivot in October when we now went to started doing motorcycles, and we've managed to develop a playbook for assembly. And right now we are really bootstrapped and working a lot with grants, and have a few interesting partners that we've joined up with. So we're able to assemble 200 plus motorbikes, and I'm being conservative here with the number, a month with a team of like 4 or 5 people. And there's about 2,000 bikes a year. And this is just without investment. And so we actually managed to do that and get that in-house. We're developing our own battery swapping stations, our own battery cabinets that are designed for the continent. And this is all driven by African talent. And I'm super proud of that every single piece of our hardware that we are building, so there's not to say that we're bringing in some of the bikes from abroad, but some pieces that we're building ourselves are driven by Kenyans who went to Kenyan universities. And I think that's very interesting because, when you talk to VC and they're like, we have a very African team. I think there's so many memes about it. They're like, oh, I don't want to invest in that. Or you have startups where you've got the top level management just being, studied outside the continent, or being white, or being, just not from here is a challenge. And I really think we're being very intentional about building talent. And yes, it is sometimes challenging to find, but the team we have is great. One thing I can also say is a real achievement is the culture we are building here. I don't have particular hours that I ask people to work, but I have output-driven goals. And so, one member of my team prefers to work, he's a night owl. So I would say night runner, but he's a night owl. So he works from about 8 p.m. to 4 a.m. And I'm like, cool. There are some meetings we have touch base with, and we're really developing a culture that's, I think, suited for the next few years of the continent, right? Where people are not going to particularly work in offices. And I still think there's that important like physical touch points, but we're having that being developed. In terms of the future, we are going to be raising capital in August. And we plan on getting to more than 1,000 bikes, hopefully by the end of 2022, between 500 to 1,000 bikes. And that puts us at a really great position to be ready for a Series A round after that. And we're looking a lot at also incorporating tuk-tuks, as I mentioned, the 3-wheelers, and potentially expanding to different countries and different cities in Kenya. And we think that the total addressable market for e-mobility in East Africa alone for electric motorcycles, I've said very many things, motorcycles and electric, is $12 billion. And this industry is growing at an alarming rate. The number of motorcycles have rebounded since COVID in Kenya. And I think the situation is very similar across Africa, because who loves to be in traffic? I don't think anyone does, right? And so one thing I'm also really proud about us is we're taking a stance on women. I really resonated with what Farouk mentioned around encouraging women to take charge, because we know that I think 90-something% of income that women generate stays within the home and builds on the economy. So internally, we've committed to selling 10% of our bikes to women, and we're really taking tangible steps to do this. Right, women in boda in Kenya, for example, and I say this as I finish, there are less than 1,000 in the country that ride motorbikes, and there are about 1.4 million motorbikes in Kenya. So we do have quite a challenge ahead of us to bridge this gap. But I really believe that if any time was to begin, it's now. So we have a gender focus, we have an environmental focus, and I'm super proud of what the team has been able to develop so far.
That's really exciting. Great numbers, and we can only wish you the best. And Farouk, you talk about your services being used in 10 African countries. Do you mind also sharing your successes as a company and your projections for the next 12 months?
Jesse, congratulations for all that you've achieved. It's phenomenal, and it's really, really encouraging. I take inspiration from that. EasyPay started off from just Ghana. We've been able to, like I expatiated earlier, we've been able to grow to 10 African countries. We've been able to have a partnership with UBA, one of Africa's biggest Pan-African banks. MasterCard is with us now. We've signed an agreement with MasterCard. We're working with them in various, strategies on how we can expand faster than we have. 10 countries so far has been encouraging. We're looking at in the next 3 to 5 years, do another 12. So we're working with regulators. I'm doing a lot of travel on the continent. And the end goal is for us to have a digital bank, a neobank. Central Bank has offered us our microfinance license, and it's one that would enable us to start pretty much the journey towards becoming a digital bank. It's been exciting for us. Having UBA on board is made work very, very easy for us. MasterCard is excited about our growth. They've joined us. They've become a formidable partner. And what we're seeking to achieve is exciting everybody across board. Like I said, becoming a digital bank is quite ambitious. We've seen signals that it shows that yes, it's possible, and it's exciting for us. So in the nutshell, that's what I could say about what we've been able to achieve, and it's really encouraging for us. It's boosted our morale to be able to do more. And we're working with regulators in countries where the technology, the business ideas is new. We sit down with regulators and say, look, we've done it in these other countries. We are here to work with you. We collaborate with regulators. If you don't have a policy framework, we work with you, we share ideas with you, bearing in mind your country specific, exceptional case, we're able to work with you to do it. So what the strategy is to really, really work with regulators and then be able, because it's in our interest, if business, it
Farouk, I think we've lost you again. Can you hear me, Farouk?
We are now. Hello?
Oh yeah, I can hear you now. And maybe I'm looking at the time, and I could listen to you gentlemen the whole day, but maybe as a departing point from the both of you, maybe starting with you, Farouk, while we still have you on the line, what sort of advice would you have for others who want to set off in a similar direction and enjoy success in Africa?
For me, it's about starting. I have quite a number of people approach me with business ideas and haven't started. That's why it's called a startup. You start. The idea shouldn't be on paper and say, yes, you need to start. You need to point to, certain routine of growth, certain ideas that when you need to have a prototype of your idea. It makes it very attractive. It gets an investor or funding partner to understand how things work. If you don't take the jump, it's like you haven't shown commitment. With however small it is, whatever it is that you have, we take the Easy Pay story for an example. When my partner was starting, it started from just a basic space. It's just his laptop. That's where it started from. But you find young entrepreneurs trying to have it all together before they take the leap, and it becomes very difficult. If I'm a founder, I want to see commitment on the part of the startup. I'm sure when Jesse started, he took the plunge. He mobilized resources, immediate resources that he can find, and then he started. So as a startup, you need to start. Once you start showing some projection, you start showing some hardcore, facts and figures, you become attractive, and you've proven people have understood how it works, So I encourage people to take the jump. They shouldn't just hold back. Just take the leap, understand the business. What you realize is that in moving, You are even able to fine-tune your technology. The reality is presented to you, and you realize that, hey, this component needs adjustment, this side needs to be tweaked. So you're able to, you know, tweak your idea as you go. So I would encourage people to start, however small it is, just start. It's in your own interest. Sure.
Excellent, excellent. Just start. And Jesse, your departing point, everyone's watching, everyone's listening. What piece of advice would you give them?
Don't give up. It's not easy. And you know, just following off what Farouk said, once you start, don't give up. There'll be many times where you feel like it, many times where you think you're crazy. But if you really believe in what you're doing and you're solving a real problem and you're capturing value, creating value for a lot of people, don't give up. You're onto something. And I believe in what you're doing. So I think you're going to totally get it if you're pursuing that with your ambitions. And then, you know, network. Your network is such an asset. You know, I'm a young guy, so I've not had a lot of time to mobilize a lot of capital, right? I'm not from a very wealthy background, so, but I managed to connect with an investor and say, hey, look, this is what I'm doing. And as Farouk said, once you have a prototype, especially if it's in the software category, in hardware, it's a little bit challenging because it's more expensive upfront. But if you're able to come up with a prototype, and it doesn't need to be fancy with all the bells and whistles, it just needs to be something functional, right? They always say if you're not embarrassed with your first prototype, then you know you've launched too late. So that's what I would say. Just don't give up, start, and try and enjoy the journey, because if you're not enjoying it, you know, it sounds very woo-woo, but if you're not enjoying it, it's not worth it.
Thank you so much, gentlemen. Really appreciate your time. Just to summarize the last points: start, don't give up, network, and enjoy the journey. I'm really, really happy that I had this opportunity to chat to you. I'm wishing you the best of luck and more great successes. As Startup Africa magazine, we're actually looking forward to profiling you and your successes and everyone else's. Thank you so much for your time. Over to you, MC.
Thank you, Q.
Thank you, Farouk and Jesse and Q. That was great. You know, it's really nice to get some case in point and some case studies to discuss, and to see how, you know, people are driving these sectors on the African continent. Thank you so much for tuning into this virtual summit. It's been great. I've learned so much. I don't know about you, but lots of case studies and experiences that have been shared by our esteemed panelists, and I'd love to take this opportunity to thank them. I'd like to thank all the partners on this forum as well: African Energy Chamber, Abu Dhabi Global Market, African Private Equity and Venture Capital Association, Afrique Invest, HG Africa, C3, Startup Africa, and Grosvenor Capital. It's been an amazing journey for me, and I've learned so much. And from my company, you know, Impact Investment, like I said, it's very, very much a tool to drive Africa's growth and prosperity. And we have to do this by coming together and forging more partnerships and relationships between the Middle East and Africa. And that is why this platform is so amazing, because together we can build and transform and change lives and focus on upward mobility and to bring people out of poverty. For us to be able to meet the SDGs by 2030, partnerships for the goals are key. I would like to leave it here by saying a big thank you to all, and also to advise you to stay safe, because we're still in this pandemic. Stay safe. Bye.